LayerZero, or the ZRO token, is one of the best performing cryptocurrencies in the last week. The question is why? Who is buying here? Who is selling here? How much longer could this rally last? Let's have a look at the on-chain data, the data most people are not considering. This here is ZRO relative to the rest of the altcoin market. We are not looking at a US dollar chart here. We are looking at relative performance. And initially, it wasn't great at all. Initially, LayerZero underperformed the rest of the altcoin market by 72%. But things have changed since the beginning of the year. We have now outperformed by more than 100%. And so the big question is, what's actually going on here? Why do we see that outperformance? Is there something fundamental going on, or is this all just short-term speculation? Now, there is a potential problem with ZRO, and that's the tokenomics. How many circulating tokens do we have over time? When the supply grows over time, that's potentially bad for the price, because we need to see the demand grow at least at the same rate as supply, just for the price to be stable or potentially appreciate. We went from 250 million ZRO up to 455 million. The supply has already almost doubled. Unfortunately, the AI of CoinMarketCap doesn't give us a good reason for this price rally. Just a sector rotation, a surge in trading volume, and a technical support. I don't think that any of those aspects have a real impact what's really going on here. There are some announcements on the Twitter profile. For example, a cooperation with Cathie Wood's ARK Invest. This can be seen as a positive or as a negative. Of course, if there are outside investors, they also want to make a return. And very often those returns are made on the back of the retail investor. There's also potential technical improvements. But let's have a look at the on-chain data. We've got 15,000 holders on the Binance Smart Chain, and we've got 22,000 holders on Ethereum. Now what we see here on the left side, that's the number of holders on the Binance Smart Chain with at least 500 ZRO tokens. In the middle it's 5,000, on the right it's 50,000. We can see how since the beginning of last year we actually do not see any growth in the number of retail investors. We did see continued growth for the medium-sized investors, right? So for the ones with at least 5,000 tokens, which by the way is roughly $10,000 worth of the token. The price is close to $2. But since November of last year, that's going down. The number of whales is also rather going down. Now that's on the Binance Smart Chain. Here we've got the same charts for the Ethereum chain, and they tend to be more relevant simply because the numbers themselves, they are higher. Here we did see some continued accumulation across all wallet cohorts, a bit of an acceleration in the last few days. But really, since November of last year, retail has stopped being interested in the token. Medium-sized retail continued to buy somewhat, but not as quickly as it used to. And the number of whales has definitely not increased again since October, November of last year. Interestingly enough though, that's where the price has bottomed. So how is this possible? When prior we had more and more wallets that held the token tended to underperform. Once the number of investors did not go up anymore, once the accumulation on the spot market has stopped, suddenly the price is rallying. What's going on? Who is pushing up the price? It seems to not be just a lot of holders on chain. What I think is going on here is manipulation via the perpetual futures, at least to a degree. So in the last 24 hours, we had 100 million worth of trading volume on Upbit, but on the perpetual futures market, we had more than 6 times of that trading volume, 661 million. So really, it's the perpetual futures market where the price discovery is made. And since October 10th, the flash crash, where many altcoins went down, the funding rate for ZRO tends to trade around the zero line. It's not anymore long-term positive. It tends to be sometimes positive, sometimes negative. So the overall sentiment has rather worsened over time, and I think that's one of the reasons why now we see a potential short squeeze. Potential manipulation through the perpetual futures. Now, the open interest, the amount of bets on the price, that has also now peaked with that recent price rally. And usually there is some correlation between open interest and the price itself. So when open interest is high, so when the green area here is high, then the ZRO price tends to be high as well. When the amount of bets on the perpetual futures market on ZRO is going down, and the price tends to go down as well. And since we are now very elevated in open interest, since we are at historical levels, this might not be very good considering the price development going forward. Trading volume is also somewhat correlated with price. It's also rather high now. And surprise, surprise, we did get quite a few liquidations on both sides actually, not just on the long side. If we are optimistic, then LayerZero will be able to just offset its token supply, right? The supply grows very, very quickly. The demand has to grow at the same rate. If we are optimistic, then LayerZero will just perform in the same manner as, say, Bitcoin or Ethereum, or compared to the general altcoin market cap. So this would be the growth of the project. That would then mean that the ratio of ZRO relative to the others market cap would stay stable. It would hover around this dotted line. This shows us that with the current rally, we are already slightly above that potential equilibrium price. Now, I believe that it's unlikely that LayerZero will be able to grow at the same pace as its token supply. And that's not necessarily just token specific or project specific. That's simply the general macro, right? Nobody is interested in buying altcoins anymore. We've seen this with the on-chain data. The number of investors, especially retail investors, is not going up anymore. And so that then would imply, if the supply of LayerZero goes up, that then the price should rather long-term underperform. So this is the absolute bull case. We just hover around the dotted line. I think it's more likely that we're rather going to long-term underperform and we're going down from here. But when are we turning around? Is it right now? Do we see another short squeeze? It's very hard to say. I'm just waiting for a while, and I'm seeing the current rally rather as a secondary squeeze. We've come up here, many people got liquidated, we went down, now we've got a bit of positive news that has created another rally, and I'm just waiting for another 2 or 3 days to then enter a short position. That's how I will play this. I do not think that a short on LayerZero is too popular just yet, and I do think that there's a good opportunity because at some point the market makers have to also offload ZRO, right? They don't want to hold this over the very long term. The smart people in crypto do not hold tokens for a very long time. If Cathie Woods got some kind of a discount for ZRO, maybe she did, maybe that's why she's investing. But for the regular retail investor, it probably does not make sense to just buy and hold a token like this, especially during the current bear market. What I find fascinating is just how bad the altcoins are doing. This is the performance in the last year. And just have a look at how poorly some of those altcoins did. Minus 84%, minus 95% even over here. Many minus 80s as well. And the others dominance, the measure of how much of all of crypto is currently in the altcoins that are not in the top 10, that's going down since the beginning of 2022. The altcoins have underperformed on average by 62%. Now this is only measured in market cap. And there is a strong distinction to be made here because market cap developments are very different from price developments. Here is what I mean. This is how many new tokens get unlocked every single week, at least for the tokens that have been tracked on Tokenomics.ai. This tends to be close to 1 billion of additional potential sell pressure. So early investors, venture capitalists, they get tokens that they can unload. The team, they get tokens that they can then sell. There's always a party that gets those new tokens, and that might lead to additional supply, depressing the price. Really, the reason for this are people like this, Andreessen Horowitz, or like this, Sam Altman. On the topic of Sam Altman, right, the founder of OpenAI, he's also supporting a project called WorldCoin. This is the number of WorldCoin tokens over time. And of course, developers and investors get more and more tokens unlocked every single month. And so this is then what that means. Just have a look at the following 2 data points. So we've got the WorldCoin price close to $10 over here. It lost 95% of its value. It's currently at 40 cents. Have a look at the same data point in terms of market caps. That was at 1.4 billion and is now at 1.3 billion. So the market cap has barely changed. The market cap maybe went down by 25% or so. The price went down by 95%. That difference is token dilution. That difference is payouts by the Andreessen Horowitz and Sam Altmans of this world. That's why the picture looks the way it does. And so there are two potential ways to deal with this, right? We can just forget about the altcoins altogether because it's a rigged game. Or we can try to take this market structure to our advantages. We can bet on falling prices of altcoins, and that's what I've been doing for the last 5 years. Here is my monthly outperformance over buying and holding Bitcoin over the last 5.5 years, roughly. The dotted line here, that's the 12-month moving average. So we are now close to an all-time high in terms of 12-month outperformance versus Bitcoin. And that's then my portfolio. That also includes dollar cost averaging. So that's a combination of saving money and outperformance. The outperformance over here is, by the way, 2.3% per month if we average out all of those data points. And so I started a copy trading pool last year as well. Bitcoin during the time period lost 25%. We made 17.3%. And so there's another copy trading pool this year, 2026. It's described over here, the relative valuation altcoin trading. It's running on a platform called Hyperliquid. 10% of the gains are profit share. There's a 5% deposit tax. And there's also other strategies that you can take advantage of. For example, here, the Ethereum trend following. Over here, the Bitcoin trend following. Here's our performance for Bitcoin trend following. It's currently got an APR of 55%. And here's our performance for the Ethereum moving average vault. It made 40% so far, and it's the best performing trading strategy on the entire platform. Ethereum trend following is on Gravity. So those are all our automated copy trading capital pools. This is all available to the premium members of this channel. Premium is available for $125 per month. You can simply just deposit on the first month, and if you don't like the content, if you don't like the additional videos, etc., you can actually unregister after 1 month and just keep your capital running. If you want to save some money, you can also sign up for the yearly membership. Then you get $250 for free, and then you can also include the relative valuation trading capital pool. So the capital pool where we bet on falling altcoins, that's only available to the annual members. The other two trend following strategies, they are available for all members, so also for monthly subscribers. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.